So if you've even glanced at the market lately, you've probably seen it, a sea of red when it comes to real estate stocks. They have just been crushed. In this explainer, we're going to break down what's really behind this major downturn and, what it all means for the future of the industry.
Right, so the big question on every investor's mind is pretty simple. What is causing this? Is it the wider economy? Is it problems inside these specific companies? Or is it maybe a mix of both? Well, that's exactly what we're here to figure out.
For a perfect example, just look at CoStar. This is a powerhouse in real estate data, right? But its stock has absolutely plummeted, going from nearly $97 a share last August to around $40 now. That's a drop of more than 50%. And it really just captures the pain being felt across the entire sector.
And trust me, CoStar is not an isolated case. This is a much bigger issue. We're talking about a whole market that's under some serious pressure, where pretty much everyone is feeling the squeeze.
The reality is, a lot of these companies are just bouncing around their 52-week lows. And this isn't just some new development. Reports are showing that even before some of the more recent global events, the sector was already having a tough time. It just signals this really deep and lingering pessimism from investors.
But here's where it gets really fascinating. Inside this big downturn, you've got this incredible story unfolding. It's truly a tale of two markets, with some huge winners and some staggering losers. And sometimes they're in the exact same business.
And you won't see a crazier contrast than with the two big iBuyers. The companies that make those instant cash offers for homes. Now get this, both of them were facing threats of being delisted last year. But since then, their paths have gone in completely opposite directions. Opendoor stock has just skyrocketed, up 375% year over year. Meanwhile, Offerpad has cratered, down 57%.
So yeah, while one company is shooting for the moon, the other is in really serious trouble. Offerpad just got its second delisting warning from the New York Stock Exchange in only 11 months. The difference between the two is just stunning.
And the pain is pretty much everywhere when you look at the brokerages. It's just a wall of red ink. You've got EXP, down 39%, the Real Brokerage, down 37%, Remax, down 32%, even Compass is down 16%. It's just a really tough environment for basically everyone.
But hold on, there are a few exceptions to the rule. Take rocket companies. They're the ones who bought Redfin about a year ago, and they're actually up 14%. It just goes to show you that even in a really down market, some smart, strategic moves can create these little pockets of growth.
But even a smart win like what Rocket pulled off can't completely protect a company from the larger economic story. So let's get to the big question. Why is all this happening? Well, the story really starts with these powerful economic headwinds that no single company can just wish away. Okay, the first big number you really need to understand is this, 6.5%. That's roughly where the 30-year fixed-rate mortgage is hanging out. We had this very brief, very hopeful moment where it dipped below 6% for the first time in 3 years, but rates have bounced right back up.
And those high rates, they have a very direct consequence. Home sales are basically stuck at a 30-year low. This puts a huge damper on what's normally the busiest time of year, the spring home buying season. And it makes any kind of rebound this year look pretty uncertain.
But listen, it's not just about interest rates. While the market is tough for everybody, some of these companies are also fighting their own unique internal battles.
Just take CoStar again. They've been in a very public fight with their investors over the whole strategy for Homes.com. It's gotten so heated that the company is actually accusing some investors of creating a false narrative and has even hired a law firm that specializes in dealing with reputational attacks. Wow.
Zillow, on the other hand, is all tangled up in multiple lawsuits. They're dealing with claims about listing access standards, copyright violations, and even really serious allegations of steering. The illegal practice of guiding buyers towards or away from certain neighborhoods. One analyst noted this has investors slightly concerned, which is probably the understatement of the year.
And all of this pressure has a very real, very human cost. The industry has basically been in a recession for almost 4 years now. And what happens? A lot of real estate agents are just leaving the business. They're either retiring or finding a new career path altogether.
And the brokerages, they are definitely aware of this. In a recent update, eXp Realty's CEO, Leo Pareja, pointed out that after a period where a lot of agents left, the company is now really focused on boosting agent productivity and retention. It shows a really clear shift in their strategy to try and keep their people on board.
So, given all of these challenges, where do we possibly go from here? Let's take a look at how the industry is trying to navigate this storm and what the future might actually hold.
okay, there are some glimmers of hope out there. Analysts are saying they're incrementally encouraged by some of the things they're seeing from Zillow and CoStar. Specifically, new product ideas like pre-market listings are being seen as potential new ways to grow and stand out from the competition.
But, and you knew there was a but coming, that optimism comes with a big catch. As analyst Stephen Sheldon from William Blair puts it, they'd be more positive on these stocks, but only when they can see a broader housing market recovery. In other words, cool new products are great, but the whole market needs to get healthier first.
And that big recovery everyone's waiting for? Well, it's not exactly around the corner. The very same analyst report says that a full market rebound is unlikely to happen in the next 6 months. That sets a very sober, very realistic timeline for anyone watching this space.
Which really leaves us with this one final, crucial question. In a market this tough, a market that is testing every single company's strategy and resilience, the next few months are going to reveal who has the right plan to innovate and thrive, and who might just disappear altogether.